swing high, broken to the upside, taking out buy stops. So buy side liquidity is taken. Then we have a swing low. It's broken. Did these candles come down lethargically? Was it like a slow meander decline? No. It was sudden. It was a lot of momentum. It was energetic. You can't miss those down close candles right there. That's obvious. They stand out, right? So that's how you know you have a shift in market structure. In this area here, it doesn't have a fair value gap. That's okay. This is only a 5-minute chart. This is where we start doing a top-down strip of 5-minute, 4-minute, 3-minute, 2-minute, 1-minute. The first fair value gap we come to, if we find one on a 4-minute, you don't need to go down to a 3. You don't need to go down to a 2. You don't need to go down to a 1. If you go down to a 4, you don't see one, you go down to a 3. If you find one there, you don't go any lower. Okay? If you don't find one on the 5, the 4, or the 3, and you go down to the 2-minute, and you find it there, that's it. You don't go down to the 1-minute. If you don't find it on the 2-minute, and you do find it on the 1-minute, then that's how you trade it. But what if you don't have one on the 1-minute chart? You don't have a trade. How's that for logic? So we have the continuation lower off of a retracement in here. Now this candle, the high of it here, I wish I would have used a lighter color, but this candle's high is right there. Okay, it actually goes just above that one right there. Not by much, but it does. But we don't need that. We don't need that. Watch what happens. Here's the 4-minute chart. Uh-oh. Something different on this chart, ain't it? We have buy side liquidity here. The candles are a little bit more beefier when we were looking at the previous slide. Look at this one. Look at the candles. They look wonky, don't they? But on this time frame, they become much more prominent, more beefy, much more stout. Like, look at me. I'm here. Take a look at me. That's what we're looking for. We're looking for clean price action where we can see the nice candlestick formations, where we're seeing the even distribution of the price going higher or lower, in this case going lower, but we're seeing that little break where there's not an even distribution of price. That's the fair value gap. So we have that run above buy side liquidity. After rebalancing over here, it goes above it and it breaks down. So we have an idea, okay, we could potentially see a trade short here. I like this fair value gap, but we also have a little bit of imbalance in here. So I want to trade in here, but my money management has to permit me to weather a run up into this area too. Remember that? That's part of the rules. But in here, we're going a little bit deeper. In my YouTube channel, I teach a breaker pattern, okay? And that is a high, a low, and a higher high. That's what this pattern is here, and we're seeing that return here. So if I see a breaker like this, yes, I think the market could potentially trade up into here, but I'm going to use the breaker's candle and just above that for my stop. So I'm not going to go way up here or way up in here, because my foundation to teaching the ICT breaker is the market's going to mostly stay in the lower half of the breaker candle, which is the down close candle right for the big move, up higher, taking out a short-term high. Trust me, the breaker is taught in the YouTube channel in other lessons. I'm not going to pour myself over top of lessons and regurgitate things, because there's a lot of you that have been training with me for a long time, and you don't want to go through that. And the new people that are here, I understand your enthusiasm and you want to know everything like a sponge. I get it and I love it. But trust me when I tell you, that is taught in the free lessons in this YouTube channel. Okay, just remember it's a bearish breaker, and that pattern is the support structure of why I would not expect it to have a higher stop up here. Okay,